afternoon, everybody, and happy Monday. Happy Tuesday. It's Tuesday. Hope everybody's staying dry if you're in the Atlanta area. My name is Jennifer Carter, and I am the COO here at Ardent Residential. I'm also the qualifying broker, and I have been doing community association management budgets for over 20 years now. So I'm definitely an expert at the subject matter. So what we're going to be doing today is we're going to be talking really about being prepared for budgets and talking really about what we're facing as a nation right now as it relates to inflation and as we see the cost of goods and services go up. How is that going to affect your community association budget? How is it going to affect collections, people not paying their dues? How is it going to affect the increases that you may have to do for your assessments? So we're going to cover all that. And then at the end, I'm going to review all the question and answers that the questions that you guys put in the Q&A. So feel free to keep those questions coming. And at the end, time permitting, we'll go through those questions. Okay. Before I really get started, I really wanted to just kind of talk to you guys about some of the vocabulary words that we're going to be using today. Okay. We're going to talk about assessments, right? For those that you don't know, there's different types of assessments. You could have your general assessments, which is really what we're going to be focusing on today is the general assessments. But there are also other assessments out there that community could use when you are wanting to collect money from homeowners. You could have a special assessment. You could have a specific assessment, and specific assessments are specifically assessed to owners for specific things. So if there's a legal bill that gets that an attorney's working on, and there's a legal bill that has to get put on the owner's ledger, that's considered a type of specific assessment. When an association fines an owner for noncompliance and they fine the owner, that fine is considered a specific assessment. So it's only specifically assessed to that specific owner for a specific reason. The special assessments are those that are used above and beyond the general assessment, and they are assessed to everyone in the community to fund maybe a non-budgeted emergency repair that came up, or maybe it gets close to the end of the year and the association has started to realize that they didn't prepare correctly for their budget, and they are grossly underfunded. And so in order to get through the remainder of the year, they may need to assess a special assessment. So that's the vocabulary on the assessment. We're going to be talking about the CPI index. I've been having a lot of conversations with colleagues and friends that do community association management in other states. The CPI index, CPI stands for Consumer Price Index. We're going to be talking about variances. A variance, for the purpose of this conversation, is the difference between two numbers. So we'll be looking at a real budget, and we'll look at the 2020 number versus the proposed 2022 budget number, and we'll be showing a variance between the 2 years. So a difference in the budgeting for the new year. We'll be talking a little bit about forecasting. You know, we start working on budgets very early on. Here at Ardent, we started working on our budgets last month. And so, of course, we're only halfway through the year. We don't have year-to-date actuals pushing us all the way through December yet. So we have to do what's called a forecasting analysis in order to get that budget prepared before the end of the year, being able to look at a line item on the budget and see what it's averaged on every single month over the course of 6-7 months, wherever we're at in the year. We're going to be talking about a 12-month spread, which I'll explain to you guys in a little bit what that means. We're going to talk about reserve studies and reserve accounts. You know, a lot of times I'll be talking to a board about reserve studies, and they don't know what I'm talking about, and it alarms me every single time, because every association that has some sort of common area should have a reserve study. And again, we'll talk about that in a little bit, what that really is. And then we're going to talk about contra accounts. So contra accounts on a budget are essentially two line items on a budget. One is an income line item and one is an expense line item, and they essentially will wash each other out. So let's say you are a community that is sub-metered and your association pays the water bill every month for the association, but every owner's usage is specifically assessed back to them through means of a sub-metering company. And so you have money coming out where the association pays the water bill in full and then collects money from the submetering company. In theory, those two line items would wash out. So this is really the question I want to pose to everybody here. Is your community association budget prepared for the post-pandemic? Really, we're still in a pandemic, but the post-pandemic consequences to what's happening nationally as it relates to inflation, goods and services going up. Are you all prepared? Are your managers preparing you for that? Because we're dealing with this, and again, this is not unique to Ardent Residential. I know this is happening at every management company out there. It's hard to even find vendors right now to provide quotes, or once a quote is approved, to get the work scheduled. And that mainly is because there is a huge shortage of labor. I just want to point out quickly that the inflation has hit a 13-year high. Okay, so that consumer price index I was telling you about, the CPI, has escalated to 5.4% in June, which has impacted the cost for goods and materials nationally. Okay, demand for supplies has significantly increased. Labor costs, many companies have raised wages just to fill job openings and retain workers. Many states are actually raising the minimum wage and overall wages just to get people in the door, to get them working. I'm sure some of you have probably experienced that when you go out to a restaurant. And you may see a note on the door asking patrons to please be patient as they're understaffed. And you should have probably recognized that there's a lot of we're hiring signs up at grocery stores and at retail stores. And I've actually gone to a restaurant recently and it was closed, and it said, due to a shortage of staff, we're not able to open right now. So this problem is real, and it's not going to get any better anytime soon. And so we need to be prepared to not only see a rise in increases from our service providers, a rise in their costs. You should start to expect some price increase letters across the board from your vendors. We've already started getting them. I've seen some community associations that have started getting them from their vendors. So don't be shocked when that letter comes, okay? Because it's going to come. They're going to come. And you should be building in a buffer into your budget to accommodate for those increases that are going to happen. And it's not a matter of if they're going to happen, it's a matter of when they're going to happen. Let's see, I want to jump to kind of doing an overall review of a budget. I'm going to share my screen with everybody so that you can see an example of a budget that we put together for one of our clients. And I'm going to just kind of go over high level overview what this budget means. A lot of people will look at this budget and their eyes will glaze over, and they really won't understand what it means, because if you aren't familiar with how budgeting works and you're not familiar with numbers, it can be very overwhelming to look at. So I'm going to just high level go over what this budget actually means. So we've got, of course, our first column, which is our GL account column. This tells us what the GL code is and what the name of that GL account is. Okay. Then we have our 2021 budget column. So this is showing us what our current year budget, what those numbers look like. Then we've got our year-to-date actual column showing us where we really are as of July. Where did our numbers land? Where are we at? And this is where forecasting comes into play, right? We have to actually look at the year-to-date actual numbers so that we can try and forecast out what we think we're going to end up spending before the end of the year. And then we have a 2022 budget column and a variance column. Again, the differences between the 2022 proposed budget and the 2021 budget. And then what we have is our 12-month spread. That's that vocabulary word I was telling you about. It gives you a breakdown every single month of every single credit, every single money that should be coming in the door for that month, what's budgeted that month to be received, and every type of expense that would be coming up for that month. Okay, and that shows you a breakdown of every single month, January through December. And let's just talk about that real quick, fiscal year. Okay, I think there's a common misconception that a lot of boards assume that their fiscal year is January through December, a regular calendar year. And that's not always the case. We have a lot of associations that run a fiscal year from July to June, meaning they do their budget typically in probably March, April. Then we also have a lot of associations in the provisions in the governing documents that will talk about the fiscal year being determined by the board of directors. So sometimes boards can set what the fiscal year is going to be. So this community is on a fiscal year of January through December. And not every single line item on a budget is going to be spread out over 12 months. That's why we call it a 12-month spread. There are going to be some items that are spread out over 12 months. Maybe it's your landscaping contract that's the same cost every single month, or your management fee cost that's usually the same and spread out over 12 months. But there are several line items on your budget that aren't spread out over 12 months. And I cannot tell you how many times I've seen incorrect budgets come over from other management companies where you have a line item like your corporate registration. Okay, that's a one-time expense. That's usually done in February, March. We update all the Secretary of State registration with the board members' information, president, secretary, treasurer. That's a one-time expense that happens one time a year. It does not happen over the course of 12 months. So when a community management company does not put that in the right column for the entire year and they spread out over 12 months, your financials are essentially going to be off for the entire year. So it's important to pay attention to that type of detail. Want to just talk about the budget numbers. So as you can see here, this community is going from $488,000, about almost $171,000. That's a lot of money. And when you have that happen, you essentially have two options. Okay, you either are going to have to cut some line items on your budget, or you're going to have to increase your assessments. And that's the reality that we're going to be facing this year, that the associations are going to have to increase their monthly or annual or quarterly or whatever they are. They're going to need to increase them in order to compensate for all the expenses that are going to happen in 2022. Every category has like a category with several expenses that live underneath them. Okay, so we have general and administrative, and every management company does it a little bit different, but we have general and administrative, utilities, landscaping, amenity and recreation, and then reserve transfers, and then capital expenditure projects. So let's talk about capital expenditure projects for a minute, okay? These are typically based off of what your reserve study tells you. Now, again, I've talked to a lot of boards, and again, I'm going to say it again, it's very alarming to me when they tell me that they don't know what a reserve study is, okay? A reserve study is something that is done by an engineer that specializes in reserve studies for community associations specifically. And it's a very dry read. Okay, it's typically done. It's, you know, could be anywhere from 50 pages to 300 pages. It just depends on how many common areas your community has. And it's as fun as reading as your governing documents. Okay, so they're very dry. But there are a couple of pages that I always like to point out to people that are really important for you to understand why you need to have a reserve study. So the reserve study is going to essentially tell you what type of projects you need to be doing every year. Okay, and about an estimated cost as to what those projects might cost with inflation. Now that's with about a 2% inflation. We're not even talking about a 5.4% inflation, right? What we're dealing with right now. So you're going to have these projects that are going to be recommended by the engineer. Now, this is by no means a requirement you have to follow. This is just a blueprint. And that's why reserve studies need to be updated every 3 to 5 years, because things change. Boards turn over, priorities change. Associations end up having to deal with emergency repairs that they didn't have money for, and they had to use their reserve funds to pay for that emergency repair. So things get shifted around everywhere. And so, you know, reserve studies should be updated every 3 to 5 years. But This will give you a good breakdown of all the types of projects that your association would plan for in the coming year. So if I was preparing this community's budget, the very first thing I'm going to actually do is go and look to see in 2022 what kind of projects we are going to want to budget for as I start to prepare that community's budget. Okay, I would be focusing on the 2022 year. The other important page that you have to look at when you're preparing your budget, and also just so that you guys can have intelligent conversations with your membership, is we don't just guess how much money you should contribute to reserves. I wish I had a magnifying glass. I wish that I had a little genie in a bottle that I could rub and tell me things magically, but that's just not the way that works. So I get that question all the time too. How much should we be putting in the reserves? And my answer to that question is, well, what does your reserve study tell you, right? And then they say, well, what is a reserve study? And then we go on and have that conversation. But you're going to look at this specific page in the reserve study that tells you how much you need to contribute to your reserves every year so that you can fund all of those future projects. Okay, very, very important. All right, so for this community, they're basically stating that in order to fund future projects, we need to contribute $44,000 this year. Okay, and that's assuming we haven't gone off the grid too far in previous years. Okay, so you have to take that into consideration too. How much did we end up contributing in 2021? 42,000? Maybe, maybe not. It just depends. How much did we have to take out for emergency type situations? So again, this document helps you to have the intelligent conversations that you need to have with your membership when you start talking about raising the dues. Okay, because we just don't magically make these numbers up. Okay, I want to move back over to the budget here, because again, I need to know how much we need to contribute to the reserves in order to, this community needs to contribute 47,000 this year. So, you know, we're going to put those numbers in. We're going to put in the projects and the estimated cost for those projects. We're going to start working on getting those bids for those projects, even though it might take some time to get those bids back right now. We just have to be able to plug some numbers in to start, you know, getting ready for the budgets. So at the end of the day, all right, your income total, this $659,421, the income total must match your total expenses. Those numbers must equal one another. I can't tell you how many times I've also spoken with boards or looked at their budget when they've onboarded at Ardent, and I will see that they have, they're in the negative by $4,000, $5,000, $10,000. This number actually will stay minus or in parentheses $10,000. And that's concerning too, because again, where did that money come from? If you have a surplus at the end of the day, if you have money left over in your budget, that's a good thing, right? It's not a bad thing, it's a good thing. But that money needs to go into reserves, or it needs to go in to fund another project. You need to put that money somewhere else. You've got to show that you're using every dollar that's accounted for that's supposed to come in. You need to be able to let it show as some sort of expense. It needs to offset an expense, okay? The other thing you all want to be mindful of is, again, we know that this association is $170,000 above and beyond what they budgeted for this year. All right. And maybe this association is prepared to have that difficult conversation with the membership about how they need to raise their dues and why they need to raise their dues. Okay. One thing, another pitfall that I see associations do that I see very common is they don't have a reserve study, which we've already talked about, but they also don't raise their dues. Okay. I've seen associations come on board and they haven't raised their dues in 15, 20 years. Now, when you do that and you don't raise your dues, because a lot of times board members are typically, some board members, not all board members, let me say that, some board members just don't want to raise commotion in the community. They don't want people to get upset. They don't want to have to raise their own assessments. But at the end of the day, you should be raising your assessments, your general assessments every single year. Even if it's just a couple dollars a month or, $5, $10 a year, whatever it is, you need to start setting those expectations with the membership. They should be expecting some sort of increase every year. Because what happens with those boards that don't increase their dues for 10, 15, 20 years, all of a sudden, they don't have enough money to pay for anything. And they've either got to drastically raise their dues or do a special assessment. And neither one of those options is very fun, because the membership will be very upset. All right. You will have to deal with the backlash that comes with that. Now, there's a way to go about doing that and doing it correctly and tactfully and professionally. Management companies should be working with you to have a town hall meeting with the membership, doing a Zoom meeting with them, maybe to talk about, where your association's budget, what it looks like right now and what it needs to look like. And, now you've got a reserve study that says we got to start contributing $70,000 into the reserves each year. And you've only been contributing $10,000 a year. Again, you're going to want to have, it's information and education. That's what homeowners want. Okay. Let's see. I'm going to take a peek at the questions real quick. Kelly has got a great question here. Reserve studies seem to cost, they cost a little bit of money. And when is the right time to do it? When funds are tight and community is new, wouldn't that money be better spent actual in reserve rather than spending it knowing we don't have enough saved yet? It can be a double-edged sword, because those reserve studies can cost anywhere from $2,000 to $5,000-$6,000, just depending on the common elements in the community. So, and that's a great point, because you cannot just get a reserve study overnight. Okay. Once a board approves a reserve study, it's going to take the engineer approximately 60 to 90 days to even publish their first draft. All right. The first draft gets delivered to the board, and then the board can come back and have to ask questions with the engineer, or have the engineer do a meeting with them to help them, better understand some of the language in the reserve study. So if you guys are just now waiting to do your reserve studies, it's almost a little bit too late in the game. Okay. For your 2022 budget. That's what I mean. So your 2022 budget, we want to have those done and ready to go September, October. You may need to present your annual meeting, your budget at your annual meeting in November or December. So you need to have your budget done by October. You may not have your reserve study finalized if you're just now starting that reserve study process. And as far as, would the money be better spent in a reserve account versus spending it on a reserve study? Absolutely not. I don't agree. I think that you definitely need to spend the money on a reserve study, because, again, I think one of the most important pieces of the reserve study tells me how much we need to increase our dues to fund that reserve account for future projects. I wanted to go back and talk a little bit about the budget in general and delivering it to the membership. When increasing assessments, just want to caution you guys a little bit. Increasing your annual assessments, or your monthly or quarterly or semi-annual, whatever they might be, you need to check your governing documents provisions to see if there's a cap. Okay, meaning there's a provision in all of the governing documents, typically all the governing documents, that will say whether or not the board can increase the assessments to whatever number they want based on the expenses for the year. Okay, there are some associations where the governing documents provisions may say that you can only increase it by X amount, 10%. So again, that should be one of the first things your manager should be looking at before they're saying to you, hey, you need to increase your dues $100 more a month, because you may not be able to do that. If the dues are only $300, if it's 10% cap for your governing documents, you may only be able to increase them to $330 a month. And here at Ardent, we have internal structures in place so that we know what those provisions say for all of our communities. The other thing is, some associations, and this is more typical in condominiums than anything, but some associations are required to present the budget at the annual meeting. All right. Meaning, and typically that annual meeting, those provisions specifically tell you when you have to hold your annual meeting. A lot of them will say 30 days prior to the end of the fiscal year. So if your fiscal year begins in January, you better have that meeting by November 30th, because what they're doing is they're giving an owner the opportunity, if there's quorum, it's giving the owner an opportunity to make a motion to vote down the budget. Now, you don't show up to the meeting and put that on the agenda and say, is there any motion to vote down the budget? No, we don't do that. But that's by presenting the budget at the annual meeting within those terms, those provisions of what your governing documents state, you're allowing for owners to be able to have that, be able to take that action if they were wanting to take it. So a lot of provisions state you have to deliver the budget within a certain number of days of the fiscal year. If there's an increase, you know, what are those provisions say about if you are increasing, what kind of notice do you need to give your membership about the increasement of the dues? Okay, let me go back to our Q&A here. We have a question, is the variance and net change the same thing? Yes, they are. They are exactly the same thing. Thank you, Amanda. Let's see. I wanted to keep my talk down to about 30 minutes so that I could answer questions that you guys might have. What other questions do you guys have that I haven't been able to answer for you? And was this helpful? Did you learn anything? I think Chris Williams has his hand raised here. Let me see. Hey, Chris, I just unmuted you. Or I asked to unmute you.
Okay. All right. There you go. No, this has been very helpful, and I appreciate very much the input and the direction. The question that I have is about these reserve studies, and it makes sense in terms of what the forecasting would need to be. Now, where would we access an engineer that would be able to do that? Do you guys have a list of those engineers that will that do this on a regular basis, or is it something that we have to source ourselves?
So yeah, if you have a professional management company that you guys are working with, whether that be Ardent or anybody else out there, they should be able to, if you're full service, typically speaking, your manager would get those quotes for you. If you're financial only or you are self-managed, then we would be happy to provide you guys with recommendations.
Thank you very much. Appreciate it.
You're most welcome. Do we have any other questions? Anybody else have a question? I can unmute you. Let's see. Kelly has another question. Can you talk more about past due collections process steps? Oh my goodness. Thank you so much, Kelly. Okay. I actually wanted to talk about this because, again, Kelly's asking questions specifically about collections, everybody. So you cannot run your association on past due accounts. You just can't do it. And if you're a board member and you're in on this webinar, you have a fiduciary responsibility to do everything within your power to collect on past due accounts. It is not fair to every other homeowner in your community that's paying their dues for those that are not paying their dues. Now, I understand that we are still in a pandemic state. Okay, and that comes up a lot too. You know, we get a lot of owners that you know will remind us that they will kindly remind us that we are still in a pandemic state, and that they don't understand why they're getting charged with late fees or interest or collection charges or whatever. That's the late fees and interest are determined by your governing documents, but collection costs are determined by the board and the collection services that they're using. So if you are a community that, even if you don't have delinquencies, let me take that back. Even if you don't have delinquencies, every community association out there should be working with your management company or another provider that provides collection services. I will tell you that here at Ardent Residential, we have the best collection modules out there, hands down. That is going to be me tooting my own horn. I'm going to tell you guys that right now. We have a 92% rate of return on our collections. So very highly successful. We have 19 different models for owners to choose from, boards to choose from, but let me not digress there. It just depends. The collection process steps differ depending on what type of community association you are and when you collect your, how often you collect your dues. And again, we do a lot of customizations with our clients. So a board may say, we don't want to push someone into collections until their balance reaches $500. Or maybe we don't want to push somebody into collections until they're 6 months delinquent, 180 days. Okay, so it depends on how aggressive the board wants to be. I highly recommend you be aggressive. Okay, as most of our models include credit reporting. So we do credit reporting with the three main credit bureaus. And if you catch a delinquent owner early enough, right? Maybe they only owe $200-300. You catch them early enough, it's a lot easier to collect on the $200 or $300 versus trying to collect $2,000 or $3,000 from them. So I always recommend being as aggressive as you can. I also recommend you work with owners, right? If an owner is having a difficult time paying, the board should 100% work with the owner on being on a payment plan. Okay, as long as the owner can actually, fulfill their obligation with the payment plan. And again, this comes up to a lot, especially with annual associations that are only billed once a year and they only pay once a year. Not all associations bill in January, but most do. We do have some that bill February, March, April. It just depends. But I would say most of our annual associations bill in January. And come January 30th or February 15th, we start to get very nice emails and phone calls from owners who state that they just forgot. They just forgot because it's not something that they normally have. And, they want the fees removed, whatever collection charges, maybe they've gone into collections, maybe they've got late fees, maybe they got interest at this point, and all of a sudden they've forgotten. At the end of the day, it is incumbent on the owner to know when their dues are due. Okay, I know here at Ardent we send out a ton of communication about assessments. Statements go out every month, electronically and through the mail. We send out reminders before the new year for all of our new clients, reminding them that they'll have dues coming up. At the end of the day, it's a responsibility of the owner to know when their dues are due and to make sure they're paid on time. And if they're not going to be able to pay them on time, they have a responsibility to proactively reach out and communicate that to the management company or the board. Right? I've never seen a board that's not willing to work with an owner that had proactively reached out to the board or the management company, not once. So again, all they need to do is say, I'm not going to be able to pay this by this date. Can you work with me? Every board I've ever worked with will work with those types of clients. I'm sorry, those types of owners. Let's see. Did that answer your question, Kelly? Okay, great. Let's see. Any other questions? I know we've covered a lot, but again, I think the biggest takeaway from this meeting is for you guys, don't be shocked when you start getting the price increase letters from your service providers. Don't be shocked when you start to see an increase in utility company rates. It's going to happen. And, be patient with your management companies right now, as if they're working on bids for you guys and they're trying to get quotes for either new vendors or projects. Just remember that vendors out there are struggling. They don't have enough labor to get quotes and to get work done. So everybody out there is delayed. All right, well, I'm gonna ask one more time if there are any questions. If not, we'll go ahead and wrap up this webinar. And this will also be posted on our website, myardent.com. If you have any other follow-up questions, maybe you think of after this meeting, please feel free to email info@myardent.com. That's info@myardent.com.